Do you need life insurance? There are many reasons why someone might need life insurance, but how do you know if you need life insurance? Or how much you need? Or what kind of insurance you should get? The most common reason, of course, for having life insurance is to provide a death benefit for your loved ones when you die. However, this is not the only reason you should consider getting life insurance. In this video, we'll go over the who, what, when, why, and how life insurance questions, so you have all the facts to confidently make an informed decision on whether you need or don't need life insurance. First off, what is life insurance? In its simplest form, life insurance can be defined as a contractual agreement between an insurance company and a policyholder, which guarantees the insurance company will pay a certain amount of money to the beneficiaries upon the death of the insured. In exchange for this guarantee, the policyholder pays premiums. Depending on the type of life insurance, there are other features like cash value and dividend opportunities. All types of life insurance available today fall into one of two categories: temporary or permanent. Term insurance falls into the temporary category because it provides insurance coverage for a specific number of years, or term of years, usually 10, 15, 20, or 30. After the term is over, the premium needed to keep the insurance in place gets ridiculously high. Due to the significant increase in premium after the level term period has ended, most people let their term policies lapse rather than continuing the premiums at ever-increasing rates. This is the reason why more than 90% of term policies never pay a death benefit. In the permanent insurance category, there is whole life insurance and universal life insurance. Whole life insurance can be thought of as a slow and steady type product. It is based on solid guarantees and contractual promises. If solid guarantees are important to you, then whole life insurance is the product for you. Universal life has lots of risk and speculation. In fact, insurance companies use the universal life policies to transfer risk away from the insurance company to the client. Although classified as permanent, whether index universal, variable universal, or just plain universal, universal life insurance is built on temporary term insurance. If you would like to better understand the types of life insurance and how they work, we have in-depth videos covering each of these products. We'll put those links in the description box for you. The kind of life insurance you need depends on your financial goals, the state of your current finances, your debt situation, how many dependents you have, your health, and your age. For most people, a healthy combination of term and whole life insurance is in order. With this arrangement, you get the relatively high death benefit to cheap premium ratio provided by the term insurance and the solid guarantees of the whole life insurance, which include a buildup of cash value and the opportunity to earn dividends in addition to the guaranteed death benefit. So who needs life insurance? Most everyone needs life insurance. Death is inevitable. At some point, all of us will have funeral and other death-related expenses. If you want to leave a legacy in addition to just covering burial costs, you'll need a larger policy than final expense or burial insurance. Besides the death benefit, life insurance can be a valuable financial tool. Think about it. If you're a parent, a whole life insurance policy can help pay for your children's expenses. Whole life insurance accumulates cash value which can be used for anything you like while you're living. Think tuition, college, weddings, new cars, house down payments, business ventures, and more. There's no list of approved uses the cash value of whole life insurance policies can be used for. Cash value in whole life insurance policies can be used for anything. As a spouse, whole life insurance can help supplement income for your partner. If you're the sole income earner, then a life insurance policy can provide income replacement for your spouse if something happens to you. For stay-at-home moms, insurance on your life would help your partner with childcare and raising of the children if something happened to you. Students. With whole life insurance, you can keep your student loans from being passed on to your loved ones. Federal student loans are forgiven if a borrower dies, but private student loans are transferred onto the loan's co-signers. This means your co-signers would be responsible for paying off the rest of your debt. But with whole life insurance, you can use either the cash value to pay off the loans if it's sufficient, or the death benefit can be used to pay off the debt once you die. Business owners, whole life or term insurance can help your business stay running after you're gone. A business can be named as the beneficiary of a life insurance policy, which means an allocated portion of your death benefit could be used to fund the business, buy out other business partners or shares, or other things. For caretaking, most of us have a parent, grandparent, or sibling that we will be taking care of or that we are taking care of. The cash value on a whole life insurance policy can enable us to get help for the person that we're caring for. Unlike long-term care insurance that specifies what qualifications the caretaker must have and the minimum hours needed to qualify for the benefit, cash value of whole life insurance policies can be accessed for anything, including caregiving. By using cash value from your whole life insurance, you can secure the services of the person who will be able to best care for your loved one, without having to meet those long-term care qualifications. Whole life insurance also helps people in debt. Similar to student loans, not all loans are forgiven when you die. Things like mortgages, car payments, credit card debts, for example, can be passed on to a spouse or whoever shares them with you. Life insurance payouts can help pay off these debts. But who says you have to wait till you die to pay off debt? Whole life insurance allows you to use the cash value during your lifetime to manage these debts. Now comes the question, when should you buy life insurance? Well, the answer to this question is simple. The sooner the better. When it comes to buying life insurance, the early bird gets the worm, so to speak, meaning the younger and healthier you are, the less expensive your life insurance will be. So buying life insurance now locks in your insurability at the cheapest rates available to you for the rest of your life. Finally, how much life insurance do you need? The answer to this question depends on the reason that you're getting life insurance. If you're getting life insurance primarily to cover the monetary needs you provide your family, most financial experts recommend 10 to 15 times your annual income. If you make $100,000 a year, this means you would want to get $1 million to $1.5 million in life insurance coverage. Other things to take into consideration will be dependents who rely upon you. So, for example, children, a spouse, a relative you care for, an old friend. Make sure your policy is large enough to cover these expenses satisfactorily. If you're purchasing life insurance as an income replacement and plan to use the policy's cash value while you're alive to replace some of your income, again, take into account any dependents that you have. Also consider inflation. The value of the dollar will most definitely be less in the future. Make sure the insurance amount you're considering will give you all the financial benefits you're planning on after adjusting for inflation. Then think of your debts. If you have, let's say, a $100,000 mortgage and $40,000 in student loans, your life insurance payout amount should be at least $140,000. And then there are business reasons for purchasing life insurance. If you're buying life insurance to protect a business or business partners, ask yourself these questions. How much money will heirs need to take over or sell the business? How much money would I need to replace key employees upon their death or retirement? How much money would co-owners or shareholders need to buy out my share of the business? As you can see, the amount of life insurance you should have will vary based on your individual circumstances, goals, and needs, but these factors are a great place to start when considering purchasing life insurance. There's a certain amount of insurance that life insurance companies will automatically allow you to have based on your age and income. Take a look at this chart. We can see that between the ages of 18 and 40, a person can have 25 times their annual income in life insurance. From 41 to 50, we see that they can have 20 times their annual income in life insurance, and from 50 to 60, or 51 to 60, they can have 15 times their annual income in life insurance. From 61 to 65, that amount is 10 times their annual income, and from 65 to 70, that's 5 times the annual income. After we get to 71, it's individual consideration. After going through these calculations, you can see most people realize why they are way underinsured. So how about you? Purchasing life insurance is a personal decision. At Life Benefits, we custom design policies for all of our clients. If you want to get the best kind of insurance that will help you reach your financial goals, contact our office.